What's happening? Happy Insurance Thursday. That's what I'm going to call this, Insurance Thursday. All right, so the last couple of weeks we had talked about insurance premium, deductible. Last week we talked about what is a copay. This week we're going to talk about coinsurance. So what is coinsurance? From our state exchange here in Minnesota, the definition of coinsurance is your share of the costs of a covered service, covered healthcare service. You start to pay coinsurance after you've paid your health plan's deductible. This is calculated as a percent of the plan's allowed amount for the service. We'll talk about allowed amounts next week. For example, if you have a plan with coinsurance of 20%, you pay 20% of the allowed amount until you reach your out-of-pocket maximum. That's like 2 weeks. We'll talk about out-of-pocket maximum. So, if I got hit by the proverbial bus tomorrow, and let's say I didn't have any other healthcare charges, I have a $1,000 deductible, 20% coinsurance, I would pay the first $1,000 in charges. Then I would pay 20% after that. So if I had a $5,000 bill, I pay the first 1,000, then I pay 20% of the 4,000. Does that make sense? Kind of? Good. If you have any questions on that, you know how to get a hold of me. Hit me up in the DMs, shoot me an email, phone call. Next week we will talk about the allowed amount. I think that's probably a good thing to talk about next week. That's going to give us some insight on why, even though if you have a large deductible, having insurance is better than not having any insurance. So I look forward to that. Enjoy the weekend. Next Thursday is the 4th of July. Happy 4th of July. Maybe I won't see you next Thursday. Maybe it'll be like 2 weeks from now. All right. Adios. Bye-bye.